there is a question I said we should do. December 2021, question 2B. So this was a very long question. That's why we might be log in the view, but I hope we can manage it. So let us read. It says, I hope everyone is there. Dr. Jacinta Moshari has been working as a resident dentist for the Afia Hospital for the past 5 years. On 1st January 2020, she began her private practice and leased a clinic in City Hospital, Doctors Plaza. However, she was to continue as a visiting dentist on request at Afia Hospital. I think that is not our main concern. And the visit. The following transactions took place during the year. So Dr. Jacinta decided to open her own hospital besides being a dentist somewhere else. So the following transactions took place during the year. So these transactions, there are so many. So when you have a lot of transactions in a professional firm, what you're supposed to do, you need to reconcile their cash book. You need to reconcile their cash book so that you determine the closing balance, because of course the transactions will be cash in, cash out, cash in, cash out. So you should reconcile their cash account to know how much. So my proposal will be, instead of reading all those things are so many up to number 10, we just come up with a bank account. We do the double entry, the debits and the credits. Then by the time we are reaching number 10, at least we have analyzed something out of that. So when you have, the rule is when you have so many transactions for professional firms, so this is doctors. Remember the ones who are doing were the advocates. So you come up with a bank account, then try to do a cash in, cash out. So Marianne, someone please send the question. Can someone help Marianne by sending the question in the group kindly? She's requesting. So have here bank accounts. So have their bank accounts. So bank accounts, we shall be proceeding by posting the transactions. I hope, Marianne, you have gotten the question. So let us work in thousands. Mary, but you have the past paper. Umepata, sawa. Ama ni nani alikuwa anasema hizi ona. You know, December 2021, there are two questions. There is pilot paper and the sitting itself. So this is pilot paper. December 2021, we have two sittings. There was a pilot paper and the real question. So this is the pilot. Check for the pilot paper, kindly. Olive. Check pilot. Olive, confirm to me. Check pilot. December 2021 has 2 sittings. There is the real sitting and the pilot. So we are in the pilot. So Olive Amepata, Maria, I hope also now you have seen it. We have 2 sittings, the pilot and the real sitting. So go to the pilot. There are 2 of them. So check the pilot paper. Maria, confirm. Or which page, please, to avoid wasting time? Or will be better in which page? Page 16. So anybody lost? Check page 16. Good. So people have settled. So we did that. I've said when the transactions have this many, for professional firms, not any other topic, for professional firms, when you have a lot of transactions, it is always advisable to reconcile the cash book. So we start with number 1, so it will just be debit, credit. Cash in, any inflow, we debit, outflow, we credit. So we start. She opened a separate bank account for the practice and deposited 5 million as capital. So she opened a separate bank account for the practice and deposited 5 million as capital. So capital, 5 million. We are working in thousands. 5 million. In addition, she obtained a loan from the bank of 5 million at an interest of 12% per annum. So 12% loan, money came in, so 12% loan, that is 5 million. When you get money in the loan, you debit the bank, credit the loan account. The loan will be paid over 5 years at 1 million, at shillings 1 million, together with interest at the end of each year. So they will be repaying the loan at 1 million every year, 1. Also, annual interest will be paid. So loan repayment, 1 million. Loan repayment, 1 million. Then loan interest, they also to pay loan interest. Loan interest, 12% times 5. What is 12% times 5,000? What do you get? They were to pay loan of 1 million every year and also the annual interest. So how much is that? 12% of 5. Thank you. 600. There. We proceed. Let's go now to number 2. She imported 3 dental equipment at a price of 600 each. So dental equipment, imported at 600 each, 3 of them. So 600 times 3, 1,800. 1,800. Good, we continue reading. Though she incurred freight, insurance, and port clearance costs of 200. The equipment is depreciated over 5 years. So listen to me. You don't or fine, because no problem. The 200 is for all of them. So Chicago freight, insurance, and port clearance. So you just write clearance instead of a lot of English there. Clearance, all of them, she paid 200. So you credit the cash book. So this one has a lot of stories. So we are done with dot 1 and 2. We are going to dot 3. She also bought other equipment for 1 million. So other equipment, she also bought other equipment for 1 million. For 1 million. So Maria, can you mute yourself? Then furniture and fixtures of 2 million. So F&F for 2 million. F&F for 2 million. And dental books worth 500. So dental books worth 500. Both the equipment and furniture were to be depreciated over 8 years. Depreciation is not a cash expense, so don't bring it in the bank. The dental books have a useful life of 5 years. Those are depreciation and amortizations later. So we are done with number 1, 2, and 3. Let's go to number 4. Dr. Jacinta hired a dental aide who also doubled as the clinic administrator at 60 per month, a receptionist carrying out other clerical duties at 30 per month, and a cleaner or casual at 15,000 per month. They all began employment immediately. So allow me to call those ones salaries. So salaries, 60, there is 60 plus 30 plus 15 times 12 months. All of them were per month. There was an administrator, I don't know, the receptionist. So add the 3, then multiply by 12. Give me the answer. 1260. So this is 1260. We continue reading. Now we are in number 5. Dr. Jacinta also hired the services of 2 other dentists to meet the increased number of patients or when she was visiting Afia. During the year, the dentists carried were paid for professional services at a cost of 2 million. Okay, so professional services, they were paid 2 million. Professional services, 2 million. Good. In addition, Dr. Jacinta offered some interns learning opportunities and paid them total stipend ile pesa tu kidogo of 300. So stipend 300. We proceed. Number 6. Number 6. During the year, patients paid 6 million in cash. While those on various insurance and medical covers were treated at a cost of 4 million. By the end of the year, the corporate and insurance companies had paid 2.8 million directly in the business bank. Dr. Jacinta noted that clients owing 200 will likely not pay. So, insurance paid in cash 2.8. But there are some people we treated. There are some people who were treated and they paid cash of 6 million. Yeah, they paid the cash of 6 million. So I want you to leave a good space, then have down their cash book. This one was bank account. So let's have cash account. Let's have cash account as well. Some people paid in cash. So if they pay in cash, you debit the cash account. For patients who are treated paid 6 million. So debit there. We don't have option, but not to find any. That's why I told you this question is very long. Very good. We proceed. Number 7. The cash that was received was banked, but after paying the following items. So if person only in cash from the patient, it will for bank. So you know when you take to the bank, they're supposed to credit the cash, then you debit the bank. But they are saying it was banked after paying. So let's pay, then whatever remains is what we take to the bank. So after paying surgical and prescription medicine, so I do medicine. So medicine 500. They paid for surgical and prescription medicine. Stationery 40. Cleaning consumables, so consumables 20. Consumables 20. Then other office expenses such as telephone, internet. So office 40. Office 40. Then down there before note 8, cash drawings for personal use by Dr. Jacinta averaged 40 per month. By the end of the year, only 120 was available in the office safe. So drawings, it took some cash, 40 per month. So drawings, you will consider 40 times 12. Because 40 is per month. 40 times 12 months, you will get 480. Then at the end of the year, they are saying the balance in the cash book was only 120. So skip a line here. You see balance carried down, only 120 was available in the cash book. That's what they are saying. So the balancing figure, when you take 6 minus what they paid, minus what is remaining, then the balance here is what they took to the bank. So get for me that figure to the bank. So to bank is the balancing figure. How much? How much did they transfer to the bank account? Because they have told us what remained in the safe. So they received 6, they paid, they remained in hand with 120. So the balance is what went to the bank. So give me that figure which went to the bank. Give me the figure which went to the bank. Linda, 4,800. Thank you. So Linda is saying 4,800 is what went to the bank. So you also go to the bank and say from cash account 4,800. From cash account 4,800. Good. Let's go to number 8. Let us go to number 8. Majority of transactions took place in the bank, except for one highlighted in note 7. Initially, Dr. Jacinta fixed some amount and earned interest of 120. So walikuwa na fixed deposit account, which gave them 120. So interest on fixed deposits. They in full. Interest on fixed deposits, they got 120. They had fixed some amount and they earned 120. Very good. Other expenses were mainly salaries to staff, interest on loans. Hizo tumeshafanya. Salary to staff tumeshafanya, interest on loans tumefanya. Rent of shillings 100 per month. So rent, there was rent of 100 per month. So for a year, you multiply by 12, which will give you 1,200. That is rent. Okay. Electricity and water were 60. Ebu hiyo electricity hold it kidogo. Kishikilie kidogo kwanza. She also paid 30 as subscription to the dental and aviation. So subscription, you paid 30. You paid 30. Let's go to number 9. Dr. Jacinta had paid 3-month deposit on rent, which was refunded upon the termination of the lease. So rent deposit, 100 times 3. Remember, rent per month was 1. He paid deposit for 3 months. So that is 300 for the rent deposit. For the rent deposit. We proceed. Still in note 9. Dr. Jacinta also drew 60,000 every month for personal use from the bank. So drawings, 60 times 12, that is 720. So every month in the bank, she was taking 60. Kidogo to hold that water kidogo, nimesema to skip kidogo. Meanwhile, the electricity and water bills for December had not been paid, but was subsequently received and settled in January 2021 at 45. So the electricity and water, so I'm going the other side. Electricity and water. The total, check note 8. Check note 8. Check note number 8. Electricity and water was 60. But they are saying of the 60, there is one for December which had not been paid. It means it was accrued, the 4,500. So that is minus 4.5. That one was paid next year. That is why I was holding it. I'd already seen it. So it is 60 minus the 4.5. You get 50 what? You get 50. 55. That is 55.5. The total for electricity and water bills was 60. 4.5 was paid next year. So you subtract. Cash book deals only with what has been paid. Very good. Number 10. Dr. Jessica bought surgical and prescription medicine worth 1.5 on credit. When you buy on credit, you don't bring it in the cash book. By the end of the year, she had already paid 800. While surgical and medicine worth 400 was available. Let's become a closing stock. So surgical 800. What was available? No problem. Wow, tumemaliza. So now I want you to give me the balance carried down in the bank account. So balance carried down. So balance carried down, you add the debits, then you subtract all the credits in your bank accounts. Please do for me that. People are getting 3954.5. Thank you. 3954.5. Wow, that was a hii tu ndio inanitishianga because of time. So tukifika hapo, I don't think if others can bring their head. So let's go straight to the statement of profit or loss, required Roman 1. Francisca, where are you attending classes from and how is the weather there? Acha nijue kwenye watu wako. Joshua, where are you attending class? Jen, Linda, Maria, Ibrahim, Olivia, una attend class from where? And how is the weather where you are? Is there El Nino? Ruth, where are you attending the class from? Ruth, leo mnyamaza sana. Where are you attending the classes from? And how is the weather? It is raining. It is. So let me start with myself. Me, I'm in Machakos County. It is currently raining outside here. I can see the window is just here. It is raining in Machakos. Jen, Nakuru, it is just drizzling. So more or less the same. Even this one is not raining, it's drizzling. I think it's Oyandu. So Jen is in Nakuru. And Ruth, it has been raining all the night. Oh, no rains, but very cold. So what I'll do, there's a reason as to why nimewauliza that question. Because I know after class, some of you are rushing to work and traffic and the rest. If you give me figures promptly, tukimaliza hii swali, the class ends there. We just finish there so that we prepare to go to work. So let's see. Joshua, Kilifi. Joshua, Kilifi itakuwa Kilifi County, Kilifi County. Bright, warm morning. So Joshua, the next time, the other week I was in Watamu. I was in Watamu somewhere called Paparemo. That's where I worked. So nikikuja huko nitakutafuta. So huko hata I can't expect rain right now. So let's go to that's good. So you come Ruth up. Ruth, are you around? Francisca, you are in Malindi. Malindi, not raining, but a bit cold. So it means Joshua and Francisca, you can team up for revision, because Malindi to Watamu, I think, the distance is like just 30 or 40 minutes. Ninyi mnaweza revise, mnaweza patana mfanye revision together. Patana hapo katikati. Sijui panaitwa aje huko. Maria hapa Fedha just called. Fedha is towards the airport. Sawa. So tuchape hii swali tuone where we can be. So right there, Dr. Jacinta. So Dr. Jacinta Mochari. So this question is part of professionals. That is something you need to know. But I am afraid, or Francisca just went for job assignment, so Joshua is in Tafute. So I was afraid if they bring something like this, I don't want to come in professional accounting money. What is not happening? So this is part of professional accounting. So Dr. Jacinta Montari, statement of profit stock loss for the year ended 31st December 2020. So let's have two columns. Like that. For profit and loss account, of course, you check the income less the expenses. So income for the professional firms, you all know, it is the fees which you charge your clients, the fees you charge the client. So right there, our clients, we call them patients. So fees charged to patients. So fees charged to patients, examiner kusema vizuri, but we can extract. There are those people who paid in cash. I remember they paid 6,000, if you can recall. There are people who paid in cash, worth 6. They paid in cash worth 6,000, if you can recall. Then there are those people who want insurance cover. Now this one was which note? It was not number. Which note was this? The insurance cover, people paid not 6. Okay, thank you. During the year, patients paid yes 6 million in cash, while those on various insurance and medical covers were treated at a total cost of 4 million. So what were insurance? Walichangiwa 4 million. By the end of the year, the corporate and insurance companies had paid 2.8. With us, we normally work on accruals, whether they have paid or not, so we capture everything directly in the bank business. Dr. Jacinta had also noted that a client owing 200 will likely not pay. Kuna mtu alitibiwa na yeye akasema hatalipa na alishapona. So you also add it as amount charged, then later on mtanikumbusha pale chini will bring this 200 as bad debts written off. So a certain student will ignore it here, will ignore it down here. It will be okay, but now that is not the right accounting. You know, as at now, I don't know that that person will fail to pay. So the invoice, when we give the invoice, so add the 200, then later on we'll bring it as bad debts written off. Yeah, only that. So 10,200 as I've been told there. Then there is some money which they took to fixed deposit accounts and they earned interest. So check your debit side of the cash book. There was interest on fixed deposit where we got 120. So interest on fixed deposit, I remember it was 120. Therefore, the total income for this doctor is 10,320. 10,320. Then now we go to expenses. Let's go to expenses. So less expenses. Less expenses. So expenses, instead of whether cash or through bank, all of them should be here, including akina depreciation and the rest. But now, wait another one by one will waste our time. So what I want you to do for me, check, let's go to the bank. Let's start with the bank. Credit side of the bank, expenses, most of them are there. There was loan interest, I remember. There was loan interest of 600. So let's credit the cash, bring here. There was loan interest. Just check the bank side, credit side, we'll get them there. I remember there was 600. So have that one there with you. Then there was clearance. Hapa lazima to agree. There was the freight, insurance, and clearance at the port. There's some equipment they brought that is not expensed. The freight insurance cost to bring an asset because they incurred some freight to clear the assets up of a port. That is not a revenue expenditure. That is called capital expenditure. It should form part of the cost of those equipments. So the equipment will be capitalized, will increase the cost of equipment with those freight expenses. When you are bringing items from, let's say, India or somewhere else, you are importing equipment, but it's an uncurrent asset, then the cost you incur on transport, freight, and the rest should be added as part of cost of that asset. They are called capital expenditure. So don't bring it here. The freight cost, the clearance, we don't bring them as part of expenses. Go down in the bank, you will see there was salaries. There was salaries. It was coming to how much? We took this plus this times 12. It came to how much? There are some salaries which we paid. It was coming to how much? The salaries. On this idea figures chap 1260. So salaries were coming to 1260. Then there was professional services. That one I can recall, it was 2000. And there was an intern who was being paid stipend of 30. I hope you can be able to see them. Was it 30 or 300? It was 300. Hata kama tutachukia intern, it was 300. Then there was rent. There was rent, which was 1200. They were paying 100 per month times 12 months. So rent was 12. Electricity and water. No, before that, there was rent deposit. There was rent deposit. Rent deposit for 3 months. So we took 100 times 3 and we got 300. Then electricity and water. Electricity and water, you bring in full 60. The part which will be paid next year, you only have, but you bring in full. She paid subscription, I think, to the dental, whatever. There was subscription. Subscription, they were subscribing at 30. Then, what else? There is stationery, what, a lot of issues there. So stationery. Stationery, they paid in cash. Check note number 7. There is stationery. Stationery, 40. They bought some stationery there. Ile 720 ilikuwa ya nini? There is something we multiplied and we got 720. It was for what? You kindly check for me. The 720 was about what?
Drawings.
Eh?
Drawings.
No, drawings we don't expense. Thank you for that. But we can't expense the drawings. So any other thing there? Bad debts, bad debts, this one. The bad debt, the 200. So bad debts of 200. Then note 7, we have cleaning consumables. So consumables, 20. We have office expenses. 40. Then check this note. Check note number 10. Dr. Jacinta bought surgical and prescription medicine worth 1.5 on credits. So prescription worth 1.5 on credit. By the end of the year, she had already paid 800. So sijui kama hapo ndio shida ingine inatokeanga kidogo kwa hiyo swali. When you check note 7, check the bullet 1 in note 7. Note 7 bullet 1. When you check note 7 bullet 1, there was the cash payment from the till. There was payment of prescriptions of 500. Then note number 10, she bought on credit and paid. So I don't know whether the ones they were paying in cash and these ones which they are bought on credit or not. Hapo ni examine hakutuelezea vizuri. So for now, I will assume the prescription of 1500, which was bought on credit, the cash payment they were paying for this. So I've taken everything into consideration. Next, maybe tuchape hizo depreciations kidogo. So depreciation, there are some depreciations to be worked out. There are some depreciations to be worked out. Let's start with the dental. Dental equipments. Let's start with dental equipments. Dental equipments. Note 2. She imported 3 dental equipment at a price of 600 each. Though she incurred freight, insurance, and port clearance of 200. The equipment is depreciated over 5 years. So it was 600 times 3, which came to 18. So you take 18 plus 200. The 200 is the freight, the clearance cost. Then you divide by 5 years, useful life. So that is 2000 divided by 5. 2000 divided by 5, 400. That is 400 depreciation per year. Good. Let's go to other equipments. Other equipments. There was other equipments. Other equipments were mentioned in note 3. Check note number 3. I'm coming to check your concern, Brian. Note number 3. She also bought other equipment for 1 million. Furniture and fixtures, 2 million. And dental books, 5. So other equipments, what was the depreciation rate? Both the equipment and furniture are to be depreciated over 8 years. So equipments, she bought at 1, divided by 8 years. Let's do 1 by 1. 1,000 divided by 8 years. Right, go to, I'm coming to read what you're saying. 125. 125. F and F, furniture and fittings. Furniture and fittings, 2 million. Also, they have said 8 years. 2 million by 8 years. What will you get? Ruth, umeko hapa. 2 by 8, 250. Good. Then, still in note 3, dental books have a useful life of 5 years for the purposes of amortization. So, amortization and depreciation is the same. Where I make up on dental books. Dental books. Dental books have a useful life of 5. And the cost was 500. So 500 divided by 5. That is 100. So allow me to read something before I forget. Brian was saying, kindly explain the information on the 1.5 surgical equipment. She paid 800, remained with 400. Is the balance the interest? You know, she bought your 1.5 na ile 500 ya junior that she, but she bought everything, those surgical equipment on credit. Hakulipa worth 1.5. Later, she paid 800. Later she paid 800. So there is a balance in hajalipa. There's a balance which she has not paid. So the 400 ni hizo equipments, hizo ma needles, hizo surgical equipment zimebaki pale kwa store. So the 400, that one we should treat as inventory. Hiyo ni stock ilibaki kwa store at the end of the year. So that 400, Brian, hiyo ni imports inventory, which we should treat as a current asset. The balance of 300, of course, that is what we can say they have not paid, is the payable. It should go to the balance sheet as a liability, which they have not paid. So the 400 is stock, which remain. 300 is the amount which is outstanding as payable. So Brian, I hope that explanation is all. It's at least okay with you. All right. So that is 100. Maybe if there is something which you are saying I've not captured, please let me know, because the coming, I think we have tried. If there is something you are suspecting somewhere, if there is anything you are suspecting anywhere that we have not captured, because as far as I'm concerned, we have captured almost every bit, unless there is something you are unaona ni kama tujachukua. Most on the credit of the cash book and the bank. If you are not suspecting anything, then give me this total, the total expenses. Help me with the total expenses. Brian, hujanijibu? Have you understood? The 400 balance stock. Yo, kwa balance sheet unafaa weke kama stock. Then 15 minus the 8 which they paid. Not the 300, the 15 minus the 8, because they paid 8. That 700 should be accounts payable. Hawajalipa suppliers. So give me the totals. The total expenses. So people are getting 84.25. Thank you. 84.25. So we are reporting a net profit. So net profit of how much? So 10,320 minus 84.25. So we are reporting a net profit of how much? So Ruth, profit of 18.95. 18.95. Thank you. So that is it. Let's go to Roman 2 of the required. Roman 2. They want us to prepare statement of changes in capital. So right there. So Dr. Jacinta, this is Roman 2. Statement of changes in capital for the year ended 31st December 2020. Shillings are in thousands. So have that. So you will start with the capital balance brought down. So when Jacinta started, she put in a capital of 5 million. You can remember, aliweka capital of 5 million. Then you add additional capital. Nothing. She never added anything. In fact, alienda kakopa kwa bank. So there is no additional capital. Then you will always increase your capital with the net profit. So add net profit. Net profit, the one which we have just determined, 1895. Then I remember Jacinta made some 2 withdrawals. There was withdrawals, the one I was speaking to, I don't know who was telling me, the 720. There were withdrawals from the bank and withdrawals from the cash book. So less drawings. Drawings is the money being taken out by the business owner. So it should reduce your capital. So kindly check for me. I remember in the bank, it was 720. How about cash? 720 plus, there were 2 of them. Bank was 720. And cash book, how much for 80, Ruth? So 480. So 720 plus 480 should be 1200. Actually, there is nothing. So you just get capital balance carried down. How much, ladies and gentlemen? So people are getting 56.95. Thank you. 56, 95. What marks ngapi? Your changes 3 marks. So 3 marks in 1, 2, 3. Yeah, that is okay. We are going to the last one, the statement of financial position. Niliogopa tu swali for nothing. Nilikuwa naita tukalisha ama ni nyinyi mmeielewa. So right there, Dr. Jacinta, statement of financial position. I want to delete this. Statement of financial position as at 31st December 2020. Good. So shillings are in thousand. Be ready, be ready. So we start with non-current assets. So non-current assets we have here, we have dental equipment. So non-current assets, there was dental equipment. Dental equipment, remember we took 1,800 plus 200 minus depreciation. Depreciation in dental equipment, how much was it? The depreciation, we subtract. How much was the depreciation for the dental equipment? 400, thank you. So that is 1,600. So this one here, you bring 16. Then there was other equipments. Other equipments, I remember they were 1,000. You people depreciated 125. So you should be reporting 875. F and F, I remember was 2,000. You people depreciated to 50. Really, copy me at your own risk. 17. 1750. Then there was dental books. Dental books. Those ones were 500. Amortization was for 5 years, so we did 100. This one gave us 400. If you are okay with the figures, then give me the total. give me the total. $46 only, $46.25. $46.25. Current assets. Brian, nitaanza na ile yako. Inventory. Those prescription, which remain in the stock? It was the last. It was the last item, the surgical and medicine. You can indicate surgical and medicine as ikutumika, the 400, the ones which remain hapo kwa lab, they were not used. So you bring there 400. Give me the balancing figure we got in the bank. How much was our balance carried down in the bank? What figure did we get, by the way? The balance in the bank, then we bring the balance in the cash book. Cash book hata walisema, they said the balance was 120. So bank, what was our balancing figure in the bank? 3954. 3954.5. How about cash book? Cash book we can read down there. That one we were given 120. The balance which remained was 120. Then there was rent deposits. Hii kitu kingine watu watakangi kujua. Ukilipa landlord, hata kama swali ita balance hiyo ndio kweli. When you give landlord your deposit, what happens ukihama? Mtu aniambie, nini inastahili kufanyika ukihama? Ukihama, what happens? What should happen? You should be refunded. Yes. So it is always your money. It is your money in custody. Though our rudishangi za zingine, but I once got a landlord who alirudisha mpaka na kutoa. So you should be refunded back your money. So it is always tunasemanga ni deposit receivable. We normally capture it as a current asset. It was 300 because they paid 100 for 3 months. So rent deposit 3. Then kulikuwa na watu wa insurance, the insurance people. We built. Ebu check for me which note was talking of insurance, please. Kuna watu wa insurance tulikill. Which note was this? Yes, note number 6. When you take note 6, while those on various insurance and medical covers were treated at a total cost of 4 million. So insurance cover was 4 million. By the end of the year, the corporate and insurance companies had only paid 2.8. So there is insurance receivable. So insurance receivable. Total, we billed the insurance companies 4, but they had only paid 2.8. There is an assumption I want to make here for lack of where I don't know where to take it. You remember kuna ule client alikataa, yeye alisema hizi lipa ile 200. Maybe alisema hata angepona kama angekuja hapo. So that person refused to pay. So the 200 should be treated as bad debts written off, which we did. We did somewhere there bad debts written off. The bad debts written off should reduce your general receivables. So I don't know, I can subtract it from where? The only place I can subtract it is from this insurance. I want to just make assumption, labda yeye pia alitibiwa na kadi na akasema yeye atakuja kulipa. So the bad debts written off, I'll subtract it here. Please indicate in your books bad debts written off. You can look for this 200 in the debt issue. So in the assumption we have made, maybe yeye pia alitibiwa on credit na akakataa kulipa. There is no anywhere I can subtract that 400. I can't subtract it from rent, bank, cash, stock, using here anywhere. So the best place it can go is on the insurance. So how much is remaining when you subtract everything? How much remains? 1,000. Fisher, can you give me this total so that we can have our total assets? Our total assets. So you give me this figure, comma, total. Olive, it's 5774. 5774.5 with a total of 110,399. 10,399.5. Thank you. That having been confirmed, we can go to capital and liabilities. So capital and liabilities. Capital and liabilities. Kitu hatuwezi kimbia as long as I found the wine, we must also observe the content. Isikuwe tu tunaenda tu bora tu Linda alijua ati kuna topic inaitwa professionals. Bora Linda amejua kuna topic inaitwa deferred tax. Lazima, because kama hii, if I taught you those two questions, ile ya kwanza na ile assignment, then you get this, I can assure you this one can put you out. Na ni rahisi, si ngumu asante. God, I can tell you, it is wide, but I can tell you what to do in the exam na bado upite bila stress. So, capital and liabilities bring capital. So, capital, what was the balance carried down? Hapo, ile tumefanya Roman 2, the statement of changes in capital. Brought down, add what, then balance carried down. Capital balance carried down. How much did we get? Only 1,200. Ilikuwa figure kubwa. Hebu kwa 12. Olive capital, yeah, around 56.95. 56.95. Correct. Non-current liabilities, I remember they had 12% bank loans. There was 12% bank loan somewhere. Walikopa. In fact, I can remember they borrowed 5, but every year they were paying 1. This was year 1. So the balance of the loan remaining is 4. Balance of the loan remaining is 4. Then current liabilities. Current liabilities, Brian, now we bring you a payable. Payables from suppliers. From suppliers, these people bought medical and what on credit worth 15, but they only paid 8. They only paid 8. So Brian, what is remaining has not been paid. This is 700. They have not paid. So that is a liability on their side. Then also you remember electricity and water. There is amount of 4,500 which was paid next year. So it means by the time we were closing the year, there was accrued electricity and water which had not been paid. So accrued electricity and water. Accrued electricity and water, 4.5. Because we are working in thousands. So this one was 4.5. Therefore, total capital and liabilities. Total capital and liabilities. Can you add to check whether it is balancing with our total assets? If it balances, then we are good to go. Please tell me, Joshua confirms that we are much in order. Joshua confirms that we are in order. So that is okay. Just a minute. So our next topic should be IFRS number 16. Yes. So our next topic, so balance means 10,399.5. Hakuna swali ya professional wanaweza leta ngumu kushinda hiyo. So you are safe. You fanya ile nyepesi tulifanya na make sure umepitia hii vizuri. You will be good to go. So now what I wanted to tell you in exam, sikiza vizuri. In exam, ufanye ile cash book, you know those cash book nobody is going to mark. It will waste our time. Itatupotezea wakati kwa mtihani which we could have utilized. So in exam, what you do, wachana hiyo cash book. I would rather you miss these two checks. Usipofanya hiyo cash book, hii hata ungepata because this one they said what was remaining. So hiyo utapata. Then this one you could post, this one you could post, even this one here. So you can leave poteza hiyo 1 month na upost hizo zingine. So the expenses as you read pale juu ukisoma hiyo swali you record the expenses in P&L. So this question you can do with maximum even 20 minutes yote. Now out of the 20 you can get even 16 marks. 16 over 20 is sufficient. Instead of wasting almost an hour, it will waste 1 hour. You will waste 1 hour na bado upate hata 16 yenyewe. Kama ungefanya hiyo kawaida ungepata. So don't waste your time with the cash unless it is required. If it's not required, wachana nayo. Just go straight to P&L and work out those items. Correct. So our next topic is IFRS number 16 stroke. For government uses the standard for government is IPSAS. IPSAS number 13, that is accounting for leases. Accounting for leases. That is our next topic. So with the 10 minutes remaining, it is not practical to start a topic, but I've shared with you the notes. I've already shared with you the notes on IFRS number 16. So what you will do, write those notes. When we meet in our next class, that is on Friday. Friday is a public holiday. Can we strike a deal? Let's strike a deal of this. To chapter 2 from normal, 6:15 to 8 a.m. Then watu waende, kuna watu already washajipanga wanaenda Uhuru Park to celebrate. So I don't want to interfere with your program. So we'll meet after our normal time. Maria, Saturday, as usual. So tutasonga. So thank you so much. Do have a nice day. Muandike hizo notes, tutadiscuss. Mimi nitakuja na maswali in the next class. You can log out. Thank you.
Have a nice day.
Olivia, kidogo? Oh, yeah, Olivia, Saturday recording. Kwa hiyo kitu imeshinda hapa ikinisumbua. I think right now it should be ready. The book, before you log out, let me just check. It is 98, no, 100% done. So that one allow me to share in the next 3-4 minutes. Hiyo iko ready. Nilikuwa nimeiset nikianza class because nimekuwa nikiweka ikinisumbua. Then someone was saying something.
Yeah, I was just wishing you a nice day.
Now, yeah, thank you. Thank you, Olivia. Tuonaneni Friday.